Hey everyone, I hope you're doing well and staying safe during this time. If you're new here, welcome to the channel. Like I said, thank you so much for checking me out. If you haven't done so, please make sure to hit that subscribe button just right below the video. Cool, thank you so much. I really do appreciate it. And if you're returning, welcome back. Thanks again for your support. I truly do appreciate having you here.
Digital assets, all these markets would go up higher because we knew bad news didn't really matter. It actually meant more money was going to come flowing into the system. Bad news was good news in this really bizarre world we have. Well, that's not the case anymore. A lot of people are thinking, hey, the Federal Reserve is going to step in here and pound us with 5 straight, rate increases. And I don't really see that happening, to be honest. We're going to see some rates go up a little bit, I guess, but nothing like that, in my opinion, but we just don't know. Again, if they would just tell us exactly what they're going to do like they did before, look, we're not going to raise rates, we're going to step in and buy all the assets. If they just told us exactly what they're going to do, put the training wheels back on, well, the markets would adjust and we could go onwards and upwards from there. We just don't know exactly what to expect. And even they said they're going to go week to week, month to month, quarter to quarter as they decide how they're going to react. I'm sure they have some villainous plot. I don't totally believe that they're just kind of, freestyling it here, but they're not communicating to us exactly what's going to happen. We see the following. As this directly relates to digital assets, IMF warns crypto rout could lead to systematic risk. And of course, they back Fed digital coin. The International Monetary Fund says cryptocurrencies and stocks are likely to see more volatility, with the Federal Reserve set to raise interest rates. Now, this is a deal, I think, throughout this year. Both the crypto markets, the stock markets, and just overall, we're going to see a lot of volatility. I think in general, we will do well through this year. We will post, good growth numbers. But it is going to be a wild ride, really a vicious roller coaster ride. Continuing with the article, the Fed needs to tighten financial conditions. That means the interest rates have to come up, risky asset prices have to come down, and that could be painful to some degree. So that's what we're here to expect. And of course, probably they'll hit us with an interest rate increase the next quarter. People will be expecting it and they won't do it, and bam, everything will take off. I don't think we can, be that aggressive. The Federal Reserve, with their policy, we're an all-out, economic warfare with China. They have to be careful what they do. They have to keep these, stock markets, these financial markets rolling, the money flowing. And then, of course, digital assets. It's going to be your high growth asset class when comparing to everything else. I think we're going to do really well, but it's going to be a wild ride. Now, this is really interesting. Jeremy Hogan, I watched this video a little bit late. He has a new one. He's talking about DPP and what it means. I'm going to link it down below. I'm sure you've already seen it. Like 100,000 people have watched this video, but I really want to boil it down to the most interesting part of this video. And the whole thing was interesting, but the most important part. He's talking about how the SEC's actions are very abnormal right now. This isn't something that we typically see. What is going on? And it really gives us 2 possibilities. Number 1, why are they stretching time out? How does this, give them an advantage? Does it help them in any sort of summary judgment situation with the judge? Does it help them with a jury trial? Where does it help them specifically? Well, really to beat down Ripple as they try to settle this thing out on their terms, on better terms for them. That's what a delay tactic like we're seeing, that's where it will help them. That's the end goal, to settle, but to settle in a favorable position for them, or at least as favorable as they possibly can. So that's option number 1. The SEC is trying to settle this thing out in their last ditch effort. It's just to try to string this thing out as long as possible and say, hey, Ripple, do you really want to go down that path? Because it's going to take you forever. We're going to keep attempting to do this. It puts you in a very strong position. But as time ticks away, their position will become weaker and weaker. If that's what they're trying to do, we may see a settlement here sooner than later. Number 2, those Hinman documents. The only other real possibility of what you're doing here, why you would backtrack and say everything we've said is a lie. This is our guidance, and we need to protect this. The only other reason you would do that, other than to delay things and show, hey, we're gonna, first with this judge, we're gonna appeal this, and then we're gonna appeal it here and there. If your idea isn't just to delay, it very well could be whatever's in there is really, really bad. And that's kind of what court cases are all about. For the really good attorneys, it's about whittling down to those pieces of information that are vitally important, and I think Ripple's found it, right? We've kind of known all along whatever's went on with Hinman isn't exactly right. And the SEC keeps refusing to turn that over. Maybe there's something really, really, really bad there. And this is their last-ditch effort, where they don't care if they lose. They don't even care if they say, yeah, everything we said, we're a bunch of liars, whatever. They will go to all, efforts not to turn that over because it is so bad. And those are kind of your 2 possibilities. And both of those things are absolutely massive for Ripple in winning this case in a favorable way, or at least settling it out. It'll be interesting to see this play out, but you gotta admit, to see the SEC backtrack and say something totally contrary to everything they've ever said, so vital to their case, saying, hey, we don't have any opinion on Ethereum, we haven't, classified these assets, Hinman's speech is his own opinion, now they're saying, no, this is our guidance and we need to protect it. To do that, there's something going on here. It's massive, and it's great to hear, a professional's opinion, Jeremy Hogan, to say, yeah, this is very abnormal, and there's just really 2 things it could possibly mean, and both of those are very good for us as XRP holders and for Ripple, the company. Now, the last, article I want to show you here, and this is something we have to think about as we, build regulations within this country around digital assets. Congress has to think about these types of things. The SEC. This is from AMB Crypto, and it's saying, is the Coinbase effect giving exchanges an unfair advantage? And there's more to this than you might think, on the surface. We see this. If coins, especially VC-backed coins, consistently underperform Bitcoin and Ethereum after listing on Coinbase, that says to me that insiders were waiting for big dollar-based exchanges to list so they could sell. This is what we see. We hear all the time, really, Coinbase. It's exit liquidity for your big-time investors, your VCs, your early investors and projects. And this is the big issue here. When Coinbase is deciding, what assets are they going to sell to us? The consumer. Well, a lot of times, it's going to be what benefits, their investment are. Where they invest in these projects very early, and then they dump them on us. Really might be a security violation in its own right. It's definitely not a fair system. It's not a system that favors the retail investor in any way. Many times by the time something hits Coinbase, it's all over Red Rover. The big gains have already been had. And the things that are ultimately successful may not be the best projects, the ones with the most utility. It may be the ones with the biggest backing. From Coinbase and other VCs out there, they invest on the cheap and then, hype it up and dump it on the retail investor. There needs to be some sort of system here, some sort of disclosure. It's not wildly different than what we see in the stock market, right? Where only qualified investors get to invest in certain things. And then when they have very high market caps, guess what happens? Now they roll them out on the NASDAQ or the whatever the stock exchange is, and now it's safe for us to invest. We see this with cryptocurrencies And for U.S. investors, it's worse. Outside of this country, investors, can take place in ICOs. They're able to buy things like Moonbeam at 25 cents a coin. What a great opportunity. But you know what? If you're a U.S. investor, they ain't going to let you partake because the SEC is going to come after them. So our own regulations has kind of caused this situation as well. But we have to think about this. This whole setup, or not just Coinbase, but a lot of these exchanges, they have these VC arms that really profiteer off the retail investor. Is that really what they should be doing? And at this point in time, look, there's no regulation, so they can do it. Just another important thing we have to think about as we start building out these regulatory frameworks. Looking forward to see what, the president's executive order should be rolling out here in the coming weeks. It's really going to, I believe, put things in motion rather than, give us any kind of guidance. It's going to direct various agencies, to start working on this, get some reports ready. Let's get the process, at least, of rolling out regulations, going.
I'm your guy. I will keep you posted. I'm your advocate. I'll be back on a daily basis, usually multiple times per day, with these videos to keep you updated with everything going on. So, I hope you enjoyed the video. If you haven't done so, make sure to hit that subscribe button. Feel free to share any of my videos with your friends, family, social media, or anybody who may care to listen. Thanks so much for your continued support. I'm always here for you. I want to help you through this time. So thank you so much for continuing to choose me. Enjoy your day, stay safe, and I'll catch you again probably in a couple hours. Thanks, everybody. See you later.